Two of the hottest plays on the board this year have been oil and tech stocks, but many are questioning whether or not they can stay hot. Few people associate the price of crude oil with that of tech stocks, but the reality is the two asset classes have been positively correlated in recent months. In fact, it's stunning how correlated they've been. If you look at the stats over the last 180 trading days, NASDAQ futures and crude oil have settled in the same direction about 84% of the time. If you narrow that down to the last 90 days, the correlation's been a stunning 94%. In other words, these assets are trading as if they're one. They're trading almost identically in the marketplace. Both oil and tech stocks suffered unreasonable losses in late 2018 and have since benefited from what we believe is FOMO trading, or fear of missing out dollars, by those investors and traders who liquidated at an inopportune time and are scrambling to get back in. You'll notice that both NASDAQ and oil both topped at the exact same time in October and then later bottomed at nearly the exact same time in December. So again, these markets are traded in a highly correlated manner. In our opinion, they're going to continue to be correlated, but probably not as perfectly as they have been in recent months. So for clarification, we're charting the NASDAQ 100 futures contract. This particular futures contract represents 100 of the leading non-financial large cap companies listed on the NASDAQ stock exchange. So it's slightly different from the NASDAQ composite, which is a widely quoted stock index representing some of the lesser known NASDAQ listed stocks in addition to those that are listed in the NASDAQ 100. There's widespread concern over the pace of gains in the NASDAQ in 2019, but we argue that much of the rally is simply correcting a wrong. Stocks probably shouldn't have fallen to the depths that we saw in December of 2018, and most of the snapback rally is simply erasing irrational, panic-induced selling. That said, now that the index is in the vicinity of its all-time high, we admit the sustainability of the rally has to come into question. However, we believe the odds are in favor of some sort of last hurrah into new highs before significant selling shows up. If you look at a weekly chart in the NASDAQ, you'll see there's definitely some resistance near the 78.35 area. This is where the market peaked out in the fall of 2018. As we approach those levels, we suspect there's a lot of traders that, again, liquidated at poor prices in late 2018 and are now worried and scrambling to allocate money into the market for fear of missing out on an even bigger rally. We think that, along with short squeezing and stop running and those sorts of things, because if you look at the speculator positions in the COT report, specs are neutral to bearish, meaning they've been short for a lot of this run. And as those traders are squeezed out and they may even consider going long, we could see prices jump above resistance. If so, 84.55 is not out of question. Going to the oil market, if you look at a weekly chart, futures, obviously, crude oil futures have been trading on a tear alongside the NASDAQ. However, going forward, we aren't convinced the two markets are going to be moving in lockstep. A weekly chart of crude oil reveals that there's some resistance around the 64-65 area. Again, remember, technical analysis is an art and not a science. If crude pops a little above 64, which it already has, that's not the end of the world. That doesn't mean that we should throw out the chart and start from scratch. It just means that markets are messy, especially crude oil. And crude oil is a very emotional market, so it tends to be messier than some of the others. While we do think crude oil will probably continue eventually up to the high 70s to mid 80s, the chart suggests that there's a near-term back and fill correction due, and we think that that probably will be the case. In fact, we think any type of near-term correction could reach as deep as $55, $56 a barrel, so be aware of that. Nevertheless, seasonals are supportive. Eventually, the market should continue higher, and again, we're looking for somewhere in the $80 mark, maybe even a little higher. So in conclusion, both the NASDAQ 100 and crude oil futures are facing immediate overhead resistance. However, despite some potential back and fill trade, both markets are likely to continue higher as we work our way through positive seasonality. Further, these markets should get a boost from FOMO traders that are willing to chase prices higher in hopes of gaining market exposure that they lost late last year. Never underestimate the emotions that repetitively cause market prices to become irrationally exuberant in the short run, despite valid questions regarding the long-run sustainability. If you're interested in learning more about trading futures and options, we highly recommend our book, Higher Probability Commodity Trading. You can find it at any major book outlet. It's cheapest on Amazon. And if you're interested in learning more, there's several educational videos, articles, and tidbits on our website, DeCarleyTrading.com. We are a brokerage service. We offer futures and options trading online as well as through broker-assisted accounts. So if you have interest in trading, check out our website. Again, it's DeCarleyTrading.com.